following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you had a good evening. God, man, listen to these political speeches. Whew. This is, I called my 90-year-old mother, and, I'm like, are you watching this? She watches it like all the time. It's like a circus. It's unbelievable. Both ways, kind of wacko here. Land of no return. Interesting times. Let's take a look at crude oil. We talked about waiting patiently until we got into this 43.33 area. We hit a high yesterday, 43.39, backed off this morning into a low of 42.50, and now kind of like started crowding this. I'm not so sure we're going to bust out of here, so I'm still looking at this as, we're in a downtrend. We got a new profile attempting to appear. We're going to have some new inflection points, but right now, we've gotten into a high probability area. I love it when this happens. Again, this is where you can pick some battles. We already had a pullback off of it like we just talked about. We're crowding into it. I think, if we spin around here and just kind of stay around 43.33 and right below it, you got to, for the next day or two or even three, you've got to be looking at this, may move higher. But right now, I think you've got a chance to play. We've had a decent move up in crude here. We've had a $4 move. Maybe, let's see, what was the low here? 39.19. Yeah, we've had a $4 move in crude, a 10% move in crude, if you want to put it in perspective. And, we're reaching some inflection points. We're still in a downtrend, and you got a chance to be short right now, actually. Remember, Goldman Sachs is very long at 47. Let's take a look at gold. Let's cover some of the usual suspects here. Again, just still waiting. Got to wait until we get back above 1347 here. For guys who are a little bit more daring, you can play some defense around 1331. That's the situation on gold to hit a couple of these usual suspects. Notes, just incredibly hanging in there. Not going to look at this any other way than long unless we have a close below this 132 general area. Again, as nonsensical as that may seem, market making new highs. I think the 10-year is showing itself again. Starting to get, September starting to be on people's minds. Keep that in mind too. 96.37.38 is where we're trading on the dollar right now. This is the situation on the dollar, getting back above 95.98, 96, and to head north. To head north here, how much farther do we go on the dollar? 97.16. That's what I'm looking at on the dollar. And again, stops below 96. So the risk reward is becoming a little bit 1-to-1-ish here if you're looking at it right now to play defense against that 95.98. But I still think this thing's got legs and a ways to go on the dollar. It's crazy that, yeah. It is what it is, technically speaking. The 30-year, don't talk about this that much, but similar to the 10-year, here's the daily on the 30-year, a very similar looking chart. And again, holding up extremely well, 171.19 on fair lows. Silver, talked about this being the weaker of the metal situation. I'd rather be trading gold above 1347. Couple other things we want to take a look at. The XLE, with gold rallying up a little bit here. Let's see where we print in pre-market. Looks like a real print, 68.50. So This is the situation in the XLE. You've got you've got crude at that 43.33 area. You've had the XLE come into these weekly unfair highs. I think you got a chance to look at this as possibly taking a rest. A crude close above 43.33 on a daily is going to be pretty powerful, and then the XLE may move up based on that. But I think again, crude could just kind of stagnate here below that area, and then you've got an XLE situation that may give you a chance to sell some weak instruments in here. What hasn't really participated in the XLE for some reason, I always end up kind of migrating back to the XLE and our ETF profile heat grid, because there's been some pretty stark situations when it comes to looking at some anomalies that are going on here. Noble Energy, let's take a look at this one. Obviously one that hasn't been participating. And again, a lot of these, they aren't the Googles and the Amazons of the world, and they're not going to get you on the edge of your seat and keep you there. But, this particular weekly chart in MBL, this is pretty much plainly stating that this particular stock does not want to participate right now in any rallies up in crude. And in fact, got into that daily unfair low there and backed off. And that daily unfair low, 34.26 on the weekly, and that coincided with 34.31 on the daily. So if you're sitting here real time using the scanner, you could take some of the you could do this particular sort. You could do this particular sort. Excuse me, guys. And look at on the broad sector. Look at bottom. There's nothing in the XLE meeting that criteria now. But if I go into the dashboard here, if I go to bottom, it's going to give me candidates that are sitting, at the precipice here, either looking at it as support or possibly the edge of the cliff. So if we look at this PPL chart and look at what it's doing right now, it's going to give you candidates that are sitting right at the precipice. And if you look at this PPL, you're going to say, wow, it's in the XLU. It's on the edge of the cliff on the weekly and the daily. Could do a little flush here, but let's take, we'll have to take a look at the sector in general. And with that 10-year sitting at support, you got to be thinking, what's going to happen here and how's it going to affect the XLU. If the notes go down and that yield goes up a little bit, and I'm not so sure that's going to happen, you've got to be looking at some of these XLU stocks that are sitting on the precipice, possibly just doing a flush down. But, as we look at the XLU in general, let's go back to that. It's the cellar dweller as far as breadth goes. And there's a lot of red on the board here. But let's look at the XLU as a whole on our e-signal charts here. And we're going to take a look at this a little bit deeper when we come back, folks. We'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. Oh, my God, I'm showing the wrong thing here. Sorry about that. We're working on a piece of software in the background. Here we go. Looking at the XLU, we talked about, what's a rally in the 10-year going to do? You know what that's going to do. It's probably going to elevate some of these. But again, do you take the XLU kind of coming off and breaking down a little bit on the daily as maybe the 10-year might not rally? This is kind of up in the air, folks. I'm just kind of stepping back and looking at the grander picture here with the S&Ps. This is the story without question. We're up. We're above profiles on the weekly. We're above profiles on the daily. We've crossed the borders. We're kind of spinning around up here. And amazingly, the 10 years holding up. It's incredible, in my opinion. But again, you've got a lot of fundamental factors other than just the U.S. market going up and that, to some degree, normal reaction on the inverse side. A lot of this global rate situation arbitrage that Tom talks about often. And what does that do for the XLU? I think, you just got to sit tight on that. I mean, there's a lot of red on the board here. And again, there's not a lot of stocks that are holding up very well. Gas, AGL Resources is one of them. You guys know that that's kind of been stuck in a little bit arbitrage mode itself. So not going to be a lot of action there. But, you don't want to start playing around with these XLU stocks till you start seeing some kind of green shoots on some level. And that's just not the case right now. So this is kind of a wait and see. There's really nobody standing out, and that's a signal in itself. All right, so that's the situation with the XLU and some of the components. All right, I wanted to look at some banking stocks also. Let's look at the criminal enterprise here, JP Morgan. Obviously been, a stock that was not one to be shorted in the XLF, and here's the daily situation. So looking at JP Morgan, I had a couple emails about this one. Some people are asking, is it time to short it? The answer is no. This banking sector has, obviously caught fire. The XLF, the financials, We've gotten past some borders here, 2380, 2358, 2380. We are in a situation that, you really don't have a chance to play defense here on the short side. Do you buy this thing? And we talked about this a lot. I've talked about, there are probably better sectors to buy out there. And the broad market itself, the S&Ps in general, are obviously moving north here. We're just going to surf around a little bit here and look at some other banking stocks. Bank of America talked about, having to wait until we got back down below 1491 to even start looking at this as a short. That hasn't happened yet. We talked about that yesterday or Friday. Citigroup. Again, basically just kind of similarly trading as the XLF is. That's almost like a mirrored chart there. A little bit, relative weakness relative to recent highs, but again, nothing to be looking at from the short side yet. If we go into the ETF section here and look at the XLF, look at some of the internals, you'll notice it's kind of top of the heap here, and that's why we looked at that XLF chart until we get back below that. On the XLF, get back below that weekly unfair high. It's nothing to really play around with. Do you have some stocks in here that have shown some laggard type activity? Here's Iron Mountain breaking down completely on the weekly and daily, getting below 37.57 on the weekly, and the daily obviously caved in a little early, 38.94. Public storage, we've talked about that one before. Excuse me, guys. We've talked about this one before. We talked about, this one sitting on the precipice. We talked about this one sitting on the precipice here on the weekly and the daily. Well, that, was something that finally caved in here. And that's kind of what you look for, eclipsing these recent lows and getting below that weekly, breaking stride. Talked about that 238.22 the other day in PSA. T. Rowe Price, this is our daily, this is our weekly. This is one really, if you're looking to kind of buy XLF stocks, these are not the ones to be looking at to buy. They haven't been the ones to look at to buy. Taking a look at some other ones here. AMT. This is a cool situation here. I like this a lot. We had a new profile appear last week. Not at all being explored on the fair auction. Starting to trade below dailies. 116.16. You can play defense against this one, in my opinion. It's really not here's the 60-minute. It's really not been participating with this latest kind of move up in the S&Ps, showing itself early. At bare minimum, it's not the one to buy, but I think you've actually got a short opportunity here, and the target's down below decently around 107.68. I think you've got a decent risk reward on that one. A couple other things going on. Let's go back to the dashboard and let's look at some reversals here that are starting to happen. Uptrend reversals. So we've looked at these. Here's PHM. Looked at this the other day. In fact, came up into that 2150 and backed off. Again, remember, we're trading below profiles. We go back and retest. Those are nice little opportunities there. Quite a few XLU stocks are still in there. We talked about this yesterday. There's one XLF stock, American Tower, AMT. We just spoke about that. Showing some reversal activity here off of that uptrend. Somebody's mentioning in the den the ugly truth behind last week's job numbers. I mean, if they, you guys know the drill there. If they mention the actual employment numbers, it's shocking. I don't know how they can even, I mean, that's such a nonsense number. That's a whole show. So we looked at uptrend reversals. We looked at, let's look at downtrend resistance. These are stocks that are just kind of lifting their head up into some resistance areas that have been in a downtrend. Let's take a look at ENDP. Yeah, that one's not worth trading. Let's take a look at another one. Sempra Energy, SRE. Okay, now this one, you know, breaking down and then being at that bottom of a profile on the weekly and also being in the XLU. You want to stay away from that one. This one could actually cave through this 107.08 area. Guys, we'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to excuse me, welcome back to the show. Here we go. I like to get some different ideas. Oh, let's take a look at Amazon first, and then I'll get into that. Oh my goodness. Sorry guys, I'm trying to balance something over here. Amazon, again, you know, it seems like there so many people are trying to catch a massive wave down in something that's just gone ballistic. Again, you don't want to mess around with these things, in my opinion. You're playing with fire. The odds are super low if you're trying to day trade something that's 700 or 800 points value, as the numerical value of the stock. I mean, you definitely want to try to use areas to pick your battles and not just play that game where you're shorting and trying to catch a massive wave down in a $700 or $800 stock and no place to play defense except a monetary stop. Monetary stops have their place, and again, I use them sometimes. You have to, especially sometimes on the automated systems we have to use them too. But you want to be, in my opinion, you want to use these profiles to really play defense. I mean, you want to use them to kind of understand where to step on the gas pedal on one side or the other and block out one side of the marketplace. So we've talked about blocking out the short side. There's been a lot of reasons technically we've been speaking about that. But again, try to stay away. I mean, do yourself a favor. Try to stay away from those crazy things. Those are the things that can really disturb your normal trading plans by just even looking at things like that from the wrong side. Here's Facebook. It's been something we talked about, not shorting. And again, I understand it's kind of lagged, new market highs relative to its new highs recently. But again, I mean, I'm looking at 126.22 as an unfair high, and you might be going, oh, wow, can't we short that? You've got way better shorts out there, and one of the things I was doing a while ago, case in point, was trying to find things with the custom sorts so you guys get to kind of have a look at some things you might not be looking at relative to profiles. So when I go to downtrend resistance or I look at uptrend reversals or things like that, I'm just trying to put some darts on the board for you where you can kind of put them in your watch list and then kind of review what's going on. I'm giving, I think, a lot of information, especially these areas of inflection. And inflection points, what is inflection points? What does that actually mean? It means that you've got a chance for a change in slope. It's, you just, look it up on the internet. It's a possible area where the slope will change, all right? And that's just probably the most generic math definition that you can have on it. So these are areas where a lot of times if it doesn't change at those inflection points, we kind of race through it because people have to cover. All right, so as we look at these downstream resistance, we looked at Goldman Sachs, and we talked about this. It's an XLF stock. We've gotten into this inflection point again, 163.35. Have we been in a downtrend? Is it on the downtrend resistance thing, sword, not thing, that we're looking at right now? And as excited as you may be about the market possibly going up farther, and that may be the case, you want to be looking at stocks that, are at probability areas to possibly where the slope might change if the market comes back. Now, you've got to put stops in relative to this if you're going to play this game, but it hasn't exactly been the darling of the XLF world also. And the XLF is one of the, if we look at our breadth calculations, like we looked at the ETF heat grid a while ago, it's, top of the heap when it comes to intermediate breadth statistics right now. So you've got a couple others here. Let's take a look at NXPI. So again, this is one that's not really participating that well, and you're getting into, again, something that you possibly may be able to glean some points off of if the market does turn around. So shorting the Amazons of the world is really something that is against the odds, so to speak. So trying to find things, if you think the market's going to come down and drag some stocks with it, here's Xerox. I mean, it's a company you might not have looked at in 10 years. I don't know, but we're sitting right at weekly unfair lows. We closed last week below there on a reversal, and you've got some other things to look at here as far as playing defense. So you've got those weekly unfair highs and you've got the weekly unfair lows and the daily unfair highs, and it's a stock obviously that's been in a downtrend and it's just kind of poking its head up with the market rallying a little bit here. Yeah, I was looking at Yeah, the market does trade off those numbers on the unemployment scene, and it is what it is. Don't try to overthink that. Ask Jimmy Rogers. A couple other things on the board here. Downtrend resistance. There's not a lot of stocks here. There's not a lot of stocks in where are we at here? Sorry, strong downtrend. These are the stocks that are just almost in a no-hope situation. And if the market does pull back, these are probably just going to continue to, to go into the abyss on the downside here. Couple of these, there's some. Let's take a look at CMP here. This is an XLU stock. Now this is kind of interesting. It's an XLU stock. This is our weekly. It's really kind of taken it on the chin lately. Closed below weekly long-term profiles and is rallying up into that area, 22.92. So if we get any type of, sell-off in the 10-year, which could happen, it could happen. We've talked about it being on support and looking pretty attractive. This one is this type of stock's the one that's going to really get some legs on the downside. Gilead Science. We talked about staying away from this one. Here's the reasons why. Not participating. Now, trading below profiles on the daily, giving you a little chance to play defense on this one above 80.32. A couple Bristol Myers is, the story there. FSLR. Shoo. Ooh. Now, yeah, I know this is down, and I understand but you got a lot of things in your favor on this one. You got to close below weekly profiles. You pretty much had a retest already this week, 45.22. Don't think this thing's on sale. It is what it is. This is where the market has determined it needs to be. And obviously not really caring lately that the market's made new highs, and this is kind of putting a raised hand situation on the board for you. EQT, I think we've talked about this one too pretty religiously about this one breaking down. An XLE stock. Not participating with the rally and all. So you've got a lot of relative weakness situations here on strong downtrend. Kroger. Ooh. Yeah. On the precipice as the market was kind of spinning around. Ouch. Not the one to be buying. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology.
Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show. One of the things, too, I'm just going through some custom sorts here, breakdowns. John, can you put it? Okay. Yes, RJP, I will get that up in a second. One of the things I like to do during the day is actually keep up a couple of screens of the scanner, and I like to look at stocks that are just entering, breakdowns on the breakdowns. Obviously, you can look at this. What do we got? 1, 2, 3. Is that 10 stocks? There's 10 stocks defined as breaking down right now in the S&P 500. So what is that? I can't do the math. This is kind of amazing. So one of the things on here is waste management. And what I like to do is keep some of these sorts up real time so I can see when these things are entering the criteria. So waste management, let's take a look at the, is this real print? And not yet. So again, a stock that's starting to break down the weekly. This is an interesting situation. Breaking down the daily too. Not at all paying attention to what's going on in the marketplace. And this may be a little bit of a short chance here if there are any short chances out there. Viacom, B. I like this one a lot, actually. I was looking at this the other day when it got up into these inflection points here. It's backed off, really showing itself right now, raising its hand from the short side. General Growth Properties. This is kind of an interesting one. Could explore the entire fair auction down into 29.80. Again, we're trying to find anomalies going on right now. I have no idea what would fundamentally bring this market down. I mean, a lot of these internals are, as evidenced by some of the stocks that are just a scant amount that are in breakdown mode here. All right, let's take a look at FEYE. Okay, it's like a $14, $15 stock. I don't personally know the news on this. RJP, maybe you can expound on this a little bit in the den. So let's just take a look. Let's back up. So if you don't mind me asking, what are you considering? This is FEYE. What are you considering as a position on this? Are you, it looks like we're trading Let me see if we got a print this morning. 1410 this morning. What are you looking at this, and what type of light, if you don't mind me asking? Okay, well, it looks like it's printing 1410 right now. So anyway, we'll just take a look at it. So long shot. I got to just look at this for what it's worth. We're within a balanced area. We're obviously not cooperating with the market. I really think this is a no trade. It looks to me it doesn't really deserve to bounce. I mean, it wasn't really. I think he I think he got better things to put mental capital towards than possibly physical capital. Yeah, I mean you really don't have any divergences here on long-term navigator. Yeah, I think this is kind of a leave it alone type situation. RJP, I'm rarely right, so I'm not always right. But I try to figure out, what do you want to devote energy to, and do you want to try to play some things? This is in the middle of a fair auction on the weekly. Had some bad news. Kind of been underperforming. If I was forced to trade that thing, I'd actually rather be short than long. But again, you've got situations like Tesla that came up into this 2033 or 233, excuse me. Backed off. We talked about trying to play some defense on that one. This is obviously a story stock. Elon Musk could come out with a new idea and the stock goes to 1,000 based on his new idea. We all know how that works. But again, I mean, I think this thing could have some momentum on the downside, and more importantly, you got a chance to play defense here around 233. Again, this stock doesn't have a high beta value, so it's hard to trade relative strength and relative weakness on Tesla. It's almost just you got to find places to pick your battles on stocks like that. We are trying to put in a beta value column here on this, and we're still testing alerts, which is it's a big deal when you're trying to do alerts on 4,000 or 5,000 stocks. So we're trying to do that on the server side, by the way, not to tax your machine. A couple other ones here on the breakdown scene. TSS. If you can see that one, that's the drill on that one. Let's go back into the indices heat grid. Yeah, I hear you. Okay, so here's the globe. The S&P start breaking out again. The globe kind of gets happy. Here's the daily and weekly breadth statistics. Here's the 4-hour. Man. Okay, so we're going to hit, just wanted to show that. We're going to hit the currencies for just briefly here. And let me get my currency server up here. Here we go. All right. This Canadian dollar. Here's the euro. You know my feelings on the euro. So let's hit the British pound. We talked about this thing, I don't like the action when we kind of get off these inflection points and then go right back to it. We're obviously sailing through there now. I think we talked about yesterday about possibly staying away from this and just waiting to see what happened. Even though we got a major weekly inflection point that held up, was a nice place to lever a trade-off for a while, quite a few pips off of that. But when you come right back down to it, basically in the same week, that's not very attractive when you don't stay away from those inflection points like that. And when you get these type of breakdowns on the daily and the weekly, those are pretty damaging events, and you got to sit tight. I hear you, John from Philadelphia. I totally, he's on the frontier for sure, Elon Musk. I can't wait till he talks about a moon base, unless he already has. We'll be right back, guys.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back. Excuse me, welcome back to the show. I was doing a little sort here just on the S&P 500, looking at what was just hanging around the weekly info highs and daily info highs. Just basically pick top and top here. Tiffany's. This is our daily. This is our weekly. The stock's obviously had some problems. Has lifted its head up back into the inflection point here. The deal here with this one is obviously, somebody in the den said don't short this market. I kind of tend to agree with them right now. But if the market does come off, you want to be kind of in some of these stocks that are at inflection points that may come off a little bit here. Adobe Systems. Here's the daily. Here's the weekly. Kind of in the vicinity up there. This may be something to take a look at from the short side. Again, need some market help. Don't know if we're going to get a lot of market help. These are more daring opportunities. Valero Energy. Again, here's the daily. Here's the weekly. You know, you got to have, you know, crude could come off just a little bit here. This may be something to take a look at. All right. So let's hit a couple of futures here before we leave. By the way, we got a Aussie dollar long and strong. Got to put that in. So taking a look at the Novi Bean situation. Come on, guys, get up here. All right, so finally broke above there, right? There's no leverage here on November beans, in my opinion. This is kind of a pass right now. Just to revisit crude, coming off a little bit here this morning, off of these daily inflection points that we talked about earlier, 43.33. I think this is going to hold, guys. So I think we just could kind of meander around down here. The good news is you got a chance to play defense on crude. We've had a 10% rally in crude in a week, and we've reached a major inflection point, and looks like we want to stay away from it on that daily. I don't know if you guys can hear those chickens, man. Very loud this morning. Gold, still want to look at 1347 and above as a chance to go long there. It's kind of a do nothing unless you want to trade against the 1331, but I think better, you know, green shoots will be happening above 1347. 10-year, we talked about that. Dollar, still a big fan of being long that. 98 general neighborhood. Or wait a minute. Excuse me. 97.16 is where the targets are on that one. Want to take a look at Home Depot? I do not live at Hooters. Home Depot, you know, not exactly participating lately, but you got to look at this kind of on a bigger scale, I think. You know, you popped your head above. You got a big inflection point at 135.26. Again, these are the stocks that have shown strength, showed relative strength on the long term. And just because it's way up there doesn't mean you have to short it. This is one I actually would love to be buying support on, and I think we're kind of in that collection area again. Johnson & Johnson, 120.54 is going to be big support on this one. You got intermediate support at 123.45. Guys, stay tuned for Steve Rhodes. He's filling in for Larry. You'll thoroughly enjoy it. We'll be back tomorrow, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.